Hey, everybody, it's time for our Mortgage Minute with Tatiana. How are you?
I'm good. How are you?
Doing good. Did you have a good weekend?
Yeah, I survived.
You survived the
I
nuclear lake.
survived.
I was thinking about you so much. I was like, I want to go to Lake Anna.
Yeah, I did some wakeboarding. It was fun.
Yeah.
Nice.
Any
Yeah.
soreness, any injuries that came up?
No.
Jealous.
You don't even have a sunburn. You're like perfect.
No, I tried not to actually, not to be under sun too much.
Yes.
Yeah,
With a lot of sunblock.
I can't even go
Very
bowling
good.
without getting sore, and she's up on wakeboarding.
All right. Tell us about our rates this week.
Let me tell you about rates.
Okay.
And it's gonna be technical difficulties again, real fast.
Get better at that technical difficulties.
All right.
Okay.
Like this. I don't know what you can see, but yeah, so for the past week, the week of May 24th to the 30th, interest rates remained flat. There were some comments from Freddie Mac's chief economist that actually drove the rate slightly higher. It's comments about inflation and some treasury auctions that caused the market yields to rise. So all that contributed to slightly higher rates, but very small difference, 7.29% on 30-year fixed, and FHA is at 6.82 and Jumbos at 7.5. So, and I apologize if you hear noise because I'm in the office. Can you hear
That's all right.
Okay, good. Yeah. So that's it's pretty flat, nothing much happening, so it's not too bad.
Okay.
Okay. All right. So it's not good news, not bad news, just is.
Yeah.
No news is good news.
That's right.
Exactly
That's
right.
right. And we're coming out of the Memorial Day weekend, so things should start really picking up for the next few weeks. So it's going to be a fun ride.
Yes.
Yeah.
Yeah. Okay. Well, got a question for you. We had previously done a video on adjustable rate mortgages. You had kind of explained how those work. But let's kind of do a more broad subject. What's the difference between an adjustable rate mortgage and a fixed rate mortgage? And which one is best? How do you know which one to get?
Mm-hmm. So, and I'm gonna stop pausing because I didn't really have any slides on that. So the difference is obviously fixed mortgages rates are fixed, right? So we have 30, 25, 20, 15, and 10 is the shortest term. When rate is amortized, the mortgage is amortized over that period of time, a rate is fixed for that period of time. So let's say if you're doing 15-year fixed, it means that rate is fixed for 15 years and you will pay mortgage off in 15 years. The ARM is, it stands for adjustable rate mortgage, and that's what it is. The rates adjust, but they have a fixed period. For example, we have 5 one arm or 7 one arm or 10 one arm. It means that the rate is going to be fixed for 5, 7, or 10 years, and after that it will start adjusting. And that second portion, second half of 5-1
Yeah.
means that it will start adjusting one time a year.
Okay.
As of right now, this one arms are really not there anymore. We have 5, 6, 7, 6, 10, 6 arms. It means that rate will change every 6 months.
Wow.
Unfortunately, not
yet.
yet.
So much more volatile. Is that why?
Well, yes, because instead of rate adjusting once a year, it will adjust twice a year, basically.
Yeah.
Okay.
Is it still a 30-year mortgage?
Yes, so
Okay.
the amortization is over 30 years.
Okay.
But it would start adjusting either 5, 7, or 10-year mark. But you will, it's a principal and interest, so it is amortized. It's you will pay it off in 30 years. Typically, this type of loans, they don't have prepayment penalty, so you still can pay extra if you like.
Okay.
So the arms, why someone would choose arm over fixed rate is if the arm rate is lower than fixed rate.
Yeah.
Right now on conventional loans, conforming loan limits in our area up to 1.149 million. The difference is really there's no difference. Actually, in some cases, arms have worse rates than fixed
Oh,
rate.
wow.
You're gonna find more clients interested in arms in jumbo world, jumbo space over 1.49 million, 1.149, I apologize. So because then the rate is gonna be slightly lower. Let's say we talk about 7-year arm, and the rate is better, let's say by 0.5%.
Yeah.
So if you know that you're probably not gonna own this property for that loan,
Yeah.
or you think that rates are gonna get better and I'm gonna refinance anyways, so you'll go for that shorter term rate, because even 0.5%, even if it's 0.25%, when you're talking
Yeah.
about this high loan amounts, it's a
Yeah.
big difference in the monthly payment. So you want to save some money, you get the arm. And
Right.
7-10 arm, they're a pretty long time in historically, and you tell me if you agree that people keep houses for 7-10 years and then they move on, right?
Yeah, it says
Yeah.
sometimes I think the average is 5 to 7, but we've got people selling after 2 years right now that are
Yeah.
starting to recycle through, and
I
then
was
we've got
gonna say,
people
that's
that,
kind of long. I
Yeah.
think, I love the idea of a 7-10 arm.
yeah, it's plenty of time.
Yeah.
Yeah, that's almost like that's
Yeah.
certainly a full cycle.
Exactly.
Yeah, I mean, in that amount of time, you're either ready to upsize or downsize or whatever. I mean, if you're like me, you're ready to move.
You're just bored.
And it definitely doesn't work for everyone. It has to be
Right.
case by case. Some people just don't like that uncertainty and they don't want to deal with that. That's perfectly fine. But those that know they're gonna move out or refinance or whatever, then
Yeah.
this is gonna be a good option for them.
Okay,
Okay, makes
Good.
sense.
I like arms.
I like arms. I like your arms. I don't know why I would think. I think it was better with it. It seemed appropriate. All right. Thank you for that. Anything else?
No.
I think that's all.
Well, and
She has very nice arms, I agree.
She does, doesn't she? She works there.
She works out, I can tell.
That's right. There you go. All right. Well, okay. Well, how can people get in touch with you if they have any questions?
Yeah, call me at 571-245-3000.
All right.
Thank you,
And I'll
Tatiana.
We'll see you next week.
Okay, bye.